It's Equity News on Equity Access, your cross-section of the stock markets and of developers of the Zimbabwean economy. A fantastic evening it is to you. Thank you for joining us as we broadcast live from our Hampton studios. I'm Ibn Mabunda. Let's get started. ICT Minister Honorable Kazembe says Zimbabwe has the lowest data tariffs in the region. This he said during a parliamentary hearing this afternoon after being quizzed by Parliament on the increased tariffs by mobile operators in recent weeks. Let's have a look.
Honorable Chairman, is that our tariffs, if we compare to the rest of the tariffs in the region, in fact, when I prepared my response, we were the second cheapest, but now we are the cheapest in the region. Why do I say so? Our tariffs have always been $5 per megabit per second. $5. Sorry, 5 cents. Sorry, my apologies. 5 cents. And it was 5 cents when it was 1-to-1. So with the new monthly policy, people expected maybe the operators to increase in accordance with the new intermarket exchange rate, which was now then at 1:3. But operators obviously realized, trying to protect the consumer as well. We insisted that no, we keep them at 5 cents, regardless of whether it's RTG or it's US. So if you look at it in real sense, it has actually come down. Because when it was $5 cents US cents, it's now 5 RTGS cents. And if you
5 cents per what?
Per megabit per second. Yes, it's 5 cents. Now if you calculate in US dollar terms for comparison sake, you will realize that it's now 1 cent. If we were to use 5 point something, in fact less than a cent, which is now cheaper than even South Africa. South Africa is also charging 1 cent. So we are on 1 cent or less than 1 cent. Because now the rate is about 5 point something. If you divide that into 5, you get that less than a cent. So it makes us the cheapest in the region. The Honorable Chairman is that.
He also went on to explain how the tariffs have been adjusted vis-a-vis other countries while citing the decline in value of consumers' income due to inflation. Let's have a look.
But they are still within the stipulated 5 cents. I don't know if I'm making myself clear. They are still within the stipulated. What we don't allow them is to go beyond 5 cents. So what they were now ending up doing, they were selling maybe per 2 cents per megabit by giving you bundles which are discounted, so that a lot more people can buy the bundles, and then they can take advantage of the economies of scale in terms of numbers. But then when they realized that they could not change to US dollars, it was no longer sustainable to continue selling at that in bundle rate. So they reduced the bundle size. For the same $100, if you were buying, say for argument's sake, 50 megabyte, they reduced it maybe to 40. So obviously the public now feels that the price has gone up. But in actual fact, it hasn't actually gone up. They've just reduced the bundle, and which means they've reduced the discounted rate. But it's still within the tariff of 5 cents per megabit. I'm not very sure if I've explained that one. Yes. So, in other words, our tariffs are very low. What is now happening is obviously the disposable income has gone down, which then means people feel the price has gone up, but it's actually people can no longer afford. That's the bottom line. That's the truth. But if anything, our tariffs are the lowest in the region as we speak.
Meanwhile, former Finance Minister Patrick Chinamasa has been appointed as Zimbabwe's new chairman. This comes as the airliner grapples with perennial losses, an aging fleet and poor management. Chinamasa was the Minister of Finance and Economic Development from September of 2013 right up until October of 2017. Finance Minister Professor Mthuli Ncube says Zimbabwe's budget surplus has hit the $500 million mark. This he said through a Twitter on his official Twitter account. This, of course, is thanks to the minister's austerity measures, among them the 2% tax which has introduced on the 1st of October 2018. Electricity shortages are catching up with wheat farmers. Farmers across the board have expressed concern over load shedding, which is now affecting their irrigation. Zimbabwe has an annual demand of 400,000 metric tons and is currently producing just half of that. The balance is supplemented by imports from beyond our borders. Gold prices slumping from a 14-month peak as the US-Mexico deal cools off safe haven demand. Earlier this morning, the spot price for gold was down 0.9% from the previous session's $1,348.08 per ounce. Chrome ore production is set to increase by 40% in 2019. This is according to Zimbabwe Chief Executive John Musekiwa. This, he said, is due to increased production capacity in recent months. 2018 production stood at 350,000 tons of chrome. In the first 4 months of 2019, chrome has earned the country $120 million. Chrome is Zimbabwe's fifth largest forex earner. Zeco Holdings today released results for the 2018 financial year. According to the results, revenue mounted 21% to $620,000 from the prior year performance. Their loss-making streak continues as the firm posted a loss of $1.5 million against prior performance of $2.1 million. This concludes our evening news bulletin. Up next is a look at the news that we just reported. Don't go anywhere. Welcome back, viewers. It's time for news review, and with me to discuss the news that we just reported is Chief Analyst Respect Gwenzi. Respect, good evening and welcome to the show.
It's always my pleasure. Even good evening to you too.
Fantastic. Now, let's get on to business. Finance Minister says, well, we've hit a budget surplus of $500 million. And of course, him tweeting about it and of course, boasting. He's been boasting about these surpluses. But what is the significance of these surpluses that the minister has been talking about?
On the outside, I think when you look at what's called the Transitional Stabilization Plan, this is a short-term policy measure which was introduced in 2018, particularly to address the imbalances which were existing in the economy. Addressing these imbalances was seen as a precursor of achieving our 2030 economic targets. So basically, the TSP undertook to reform the macro finances of the economy, and critical to it was the addressing the fiscal imbalances. That is the difference between our revenues and our expenditure. So the immediate thing that the new government did when they came to power was to obviously find ways of enhancing the revenue side. In fact, they introduced what they call the austerity measures, which the austerity measures under the TSP as well as the 2019 budget. Critically, one of the key instruments of driving this policy measure was the introduction of the 2% tax. And so over the past 6 months or so, there has been a significant growth in our tax money, although there has not been an equivalent decrease in terms of our expenditure. But much of what we are realizing in terms of the surplus is emanating from the 2% tax. But in terms of significance, I think as a country, we are at a crossroads. We are at a point where there is obviously some side effects which are coming from these austerity measures. There is deep poverty levels across the country, and there has been a foregoing of some critical services which are vital for development, such as electricity, importation of electricity, and so forth. So much of these have been sacrificed in pursuit of what we are calling now austerity. But most significantly, the populace is not better off at the present moment. But the argument from a government perspective is that these are long-term solutions, and therefore there's supposed to be some immediate pain which is to be incurred. But I think from my own view...
But how much of the pain is necessary? Could this perhaps not be driving us into a recession? I mean, the IMF has come in and said...
Yeah, the recession is no longer avoidable. We can no longer grow at the same pace at which we were growing last year. Most significantly, the amount of monies that were put into the economy last year were quite huge. And also there was a spontaneous growth in economic activity, also driven by growing aggregate demand. So all these are no longer present in the current year. But in terms of what you have asked to say, what amount of pain is I think this is where we have to focus at. If you look at what the IMF resident had said on Friday in a certain engagement over the TSP at SEPS, he said that you have to manage the level at which you introduce some austerity measures. If you overdo it, then there's likely to be a real bubble in the economy. There's likely to be a real burst, actually. So I think this is a point where this is exactly at the point where we are to say, if we are saying were these measures necessary, yes, austerity was unavoidable, but then it's about the design. I think from where I sit, I find myself in a difference with what the minister has proposed because of the quantum of pain, the quantum of taxes, and also some other measures which were all put just at once, and the people have reacted. Prices are going up against that same increase in same pursuit of austerity measures. So I think there's a clear downside to pursuing pursuit of these measures, and this is what we are clearly suffering from at the very moment. In terms of whether this will result in something on a mid to long term basis, I think it's neither here nor there. It depends with how the economy reacts, or how economic agents are going to react over the next few months. If we see a civil unrest, obviously that will disrupt even the very measures that have been pursued so far. Even if we don't see a civil unrest, I think fundamentals might also be if we don't manage the monetary side well. There are also some issues to do with how we are trying to get into a new currency prematurely, whereas we are also trying on the other hand to try to correct the fiscal position. I think doing these two at the same time has got some serious implications of failure, and this is where we are most likely headed to. But I mean, we remain, it remains to be seen how these variables play out in the next few months. But it's really a critical juncture where management of perception is important, and management of flows as well is also important.
Now, talking about variables, we have an import bill of $2.5 billion in 2018 against $1.7 billion in 2017. And now we've got a wheat deficit position where we require about 400,000 metric tons, and 2018 production was at 200,000, and now the farmers are lamenting the effects of load shedding actually affecting their irrigation. What could be the implication of such? This, of course, would be a graphical presentation of how Zimbabwe is fed. Our high at about 2001, 325,000 metric tons. Now we're just at below 200,000 for 2018, thereabout. What could be the implication of such development?
I think there are two ways to look at it. There's one aspect which looks at the natural disasters. If you look at the implication of the drought, it obviously has got a serious effect on produce across all agri commodities, and so obviously this has also fed into these low numbers. But in 2017 we saw a sharp rise after government was obviously coming to support the activities. But I think much of this low produce, it actually implies that we have to also import more on a sustainable basis. We are going to keep on importing in the next coming, I mean, in this season and the coming season as well, and this puts the import bill up there. And in terms of cost as well, obviously some of these are winter crops. They should be funded, they should be supplemented by electricity, and therefore, given that government has resorted to cutting back on its expenditure on that end, it also means that production has to come down. So I think we are not in a good state in terms of our agri produce, and in terms of the outlook as well, in terms of, in that respective sector.
I realize. Now, perhaps to make progress and move on to our next development, which would be the gold prices there, which have actually seen slumping from a 14-month high by 0.9% to about 1,348, which was actually the highest that has actually been recorded there. What could be the effect of such a development in light of the fact that we actually have gold as our largest forex earner?
Yeah, so gold is our largest foreign currency earner. We earn about, in 2018, we earned about 1.2 billion in net gold receipts. And obviously that was after some 34.5 tons of gold were sold to Fidelity. But when you look at the dynamics around prices, I think what's more important is to look at the average price over a certain period of time. If you look at much of the second half of 2018, we're trading at almost prices of about 1.2 thereabout. But now the averages are obviously close to 1.295. And those are obviously fairer levels than last year. But what's now more important to ZIM is the fact that are we still able to generate as much in terms of volumes as we did last year. In the first quarter alone, we are lagging the prior year by a significant margin, a double-digit margin, and that is due to other factors such as the currency instability issues, which has driven producers to either retain their gold or to either side market their gold as well. So those are the key factors in terms of whether we're able to maintain those same similar volume levels. And I'm sure in one of the engagements with the Minister of Mines, he also alluded to the fact that they are likely to still maintain, they're likely to still beat their target of 40 tons. But that seems elusive now. Why? Because where we are sitting at in terms of the average volumes, as well as the dynamics around currencies, it seems like that target is no longer tenable. So in terms of prices, the average prices on a year-to-date basis, they're sitting pretty much ahead of last year if you can look at the trend. So I think we're still okay. What's happening globally in terms of trade war, US, China, and whatnot, these actually improve the value of alternative investments such as gold. So USD in currency terms, it actually tumbles against other against gold. So those tensions are still there, and that's why 2019 has seen an escalation in terms of the price.
The price of gold.
Yes. So I think the prices are not much of a challenge to Zim right now.
I realize. Now let's talk about the results that have just been released by Zeco. I mean, they missed the deadline, which was the 30th of April, and now the results are coming in now, and they don't look so good. It appears to be a continued series of losses, and it seems to suggest that we're actually going to see that trajectory. If we have a look from where they're coming from, this is 2014, a loss of $1.39 million, 2015, negative 1.84, 16, 1.16, then 1.91 in 2017, and now there's been a slight improvement to just $1.43 million. Now, what is the implication of this, and what is your interpretation of their stats going forward?
I think from a perspective, Zeco is not a counter that you'd want on your book, and ever since the past 7 years or so, Zeco has been one of those underperformers. In fact, it has been one of the worst performers on the stock market, and there is no serious investor who is worth his salt who would look at pushing their monies in such a counter. But when you're looking at performance-wise, they highlighted that their engineering division is still pretty much dormant. It is waiting on the railway construction activities as according to what government has already scheduled. So they are pinning their hopes on the revival of NRZ, and their construction activity, which has been the one that has been generating a bit of flows. Obviously it benefited from a bit of construction activity in 2018, but there were challenges at the end of year due to price increases, and obviously some of the projects were also cut midway into their timelines. So Zeco has not been on a healthy path ever since a couple of years now, almost a decade since dollarization. So it's not really a pleasing result. It's a company that obviously needs proper governance. The owner is not, the major shareholder is not, his brand of business is not really what's expected of a listed company.
I realize. Well, thank you, Respect, for the perspectives. Viewers, please stay with us. Up next is a look at the stock market.